Hey everyone, I'm Matt Lockaby. I'm the founder and managing partner at Lockaby PLLC here in Lexington, Kentucky. And in a recent video kicking off this series, providing an overview of the M&A transaction process, we talked about the 5 steps of every transaction: formulating, locating, investigating, negotiating, and finally, integrating. And today we're going to go into more detail on the first step of the process, the formulating step. Now, if you're a corporate or M&A or transactional lawyer, we really hope that you find some good nuggets in this video series that will help you with your practice and in advising your clients. But this series is really geared toward business owners, and specifically those Main Street small business owners who are the backbone of our economy. And whether you've been a business owner for years and you're just now looking into options for your continued growth, or if you're a brand new owner who's looking to acquire or buy another company and then start building the company, this series is going to be for you. Mergers and acquisitions can provide really tremendous opportunities for growth and diversification for any business. However, these transactions can be really complex, and careful planning is essential. And that's really what this first step, this formulating step, is all about: your careful planning. So, step 1, define your objectives. What is your overall business strategy? What is your overall growth strategy? Right? This all points to what is the vision for the business over the next year, over the next 5 years, over the next 10 years. This vision for the business is your fundamental starting point in this first formulating step. What are you looking to do, right? Are you looking to scale and grow faster than organic growth would otherwise allow you? Are you looking to diversify, enter new markets, sell other products or goods or services than you're currently selling? Having this clear vision of what you're trying to accomplish is absolutely essential. Step 2, we're going to establish our acquisition criteria. And this is simply the criteria that you're going to use that's going to guide your search for potential targets. In other words, what are you looking for, right? Are you looking for companies of a certain size? And size can then be discussed in a couple of different ways. Size by gross revenue, size by amount of EBITDA, or size by seller discretionary earnings, or SDE. We can also talk about size with respect to number of locations or number of employees. Other criteria for our acquisition targets include the industry that the company operates in. We also want to know where they're operating. In what city, what state, what region. These are all really important considerations. And finally, and sometimes the most tricky part of all this, are there any cultural values? Are there any leadership and management values that you're looking for that will align with you and your company? Again, all of these criteria, either alone or in combination with others, are going to be the filter that get you to that final subset of targets that you're really going to dive into. Step 3, you got to set a budget. This involves really evaluating and calculating the maximum amount you're going to be willing to spend, or that you're able to spend, to acquire your target. And related to that is the way in which you're going to structure the deal. Are you going to use cash reserves? Are you going to finance with debt? Are you going to offer equity? Or is there going to be some combination of those? Now, this also dovetails into understanding yourself and what you really want out of the transaction. There are some business owners who do not want partners, they do not want investors, and so understanding what they have in cash and what they can borrow is really important. For other business owners, their first call is always to an investor or a partner when a transaction presents itself. So understanding yourself, how you work best, and what you want, again, going back to that vision for the future, is critically important. In general, for most Main Street transactions, we're talking small and mid-sized business owners across the country, they're going to acquire a company with debt. All right. And so what you're really looking for when you're setting your budget is understanding how much cash flow, how much revenue does my target company have, and is there going to be enough to cover the debt service, to pay myself at least a little bit, and also leave enough left over to reinvest in the company that will actually help you follow through on that growth plan that you have set for this new entity. Step 4, Assemble your team. Any M&A transaction is going to involve a number of subject matter experts that are going to be able to help you through the entire process or discrete parts of the process. Legal, financial, operational, HR, tax and accounting. Someone will have a critical role to play in helping you through the transaction at some point in time. So this formulating phase, it is perhaps the most important part of the entire process. The time spent carefully planning, building your team, making sure you know exactly what you want and how you're going to go about achieving it is critically important. It's going to help you avoid wasted efforts. It's going to help you avoid wasting money and time. And it's really going to set you up for success farther down the line in the transaction process. In our next video, we're going to dive a little bit deeper into the second step of the process, the locating phase, and we're going to show you exactly how you can go about finding these targets that are for sale, whether on your own or with the help of certain types of advisors who specialize in this type of activity. But remember, we are in the midst of one of the greatest wealth transfers in modern history. There's plenty of businesses out there. There are plenty of opportunities out there. We're going to show you exactly where to go, who to rely on, and how to get you through your next transaction. If you've liked this video, hit the like button, hit the subscribe button, and we'll see you next time.